Christian Johnston, welcome to Radical Wealth Plan.
Hey, thanks for having me.
Yeah, we've known each other for a bit, and I've always been super impressed with your journey and also just the level of information that you're able to master and also sort of put into practice. So let me start with the journey. Where did you grow up? I know obviously military, but take us through that journey a little bit.
Yeah, absolutely. Would be happy to. So I grew up in Jacksonville, Florida, and I lived there pretty much until I exited high school. And then I moved to Annapolis, Maryland to attend the Naval Academy.
Wow. I love it. Yeah. That's a big deal,
Yeah, it's okay.
I mean, Naval Academy is right. It's like the MIT of, it's a big deal.
I loved it. Every aspect of it. And it's what I needed at the time. Yeah. It's what I needed. I grew up in a very unstructured environment for the first half of my childhood. We ended up getting, me and my sister got removed by child services.
Wow.
When we were pretty young.
Wow.
And going into college, that was a good environment for me. I needed the structure. Yeah.
And Annapolis is it's not just college. Right. If you went to like some party school, it would be completely different. But Annapolis is a super high level education. And then also it's the rigors of the military period, right?
Yeah, absolutely. So it's not as rigorous as the actual military, but you do go through a lot of the same themes that somebody going through like the beginning portions of their military service goes through.
I had one friend who went to Annapolis and actually transferred out, which is unusual. But he was a top basketball player, so he was transferred out from Annapolis and went to University of Pittsburgh Center.
Okay,
yeah.
He must have transferred in the first half.
I think they let him.
Oh, really?
Yeah, right. He told me that whole deal about
the 2 for 7.
Oh, what's the 2 for 7?
It's like once you have 2 more years of school, but then you owe them 7 more years. So
right, you
have 5 years after you get out of college that you're committed to serving as an officer in the Navy.
Right. And if you get out before the 2 years, you're okay.
Yeah.
But if you go past the 2 years, then you owe them the
college education.
And I think they made a little maneuver for him. Okay.
I've heard of people getting around it.
Yeah.
But I was excited to get out and go do the thing. Yeah.
That's cool. So Annapolis, great education, rigorous, not as rigorous as the military, which I didn't know. And what happened out of college? You're then an officer in the Navy, right?
Actually, I cross-commissioned kind of into the Marine Corps.
Oh, wow.
Yeah. Okay. So majored in cyber operations, which was our class was the first class to have that degree. And
how many years ago was that?
So I graduated in 16.
And cyber operations then versus now is
very different.
Night and day.
Yeah. I remember taking courses in AI and learning the fundamentals of artificial intelligence and data structures. And it's amazing how fast, things have developed over the last 8 years. It's crazy.
It seems like it's accelerating at an accelerated pace to the
Moore's
point.
Law.
Oh yeah.
Yeah, absolutely. It is. And I think the American population is not ready for what's going to happen to the economy and how so many paradigms are going to shift. It's going to be an interesting 5 to 10 years.
One of the things we're going to do, and I'll highlight it, is we are breaking this into 2 segments. We're going to do another segment. We're going to talk just about AI because
we naturally drifted there. Because
I find it so interesting, and I feel like I'm submersed for like a regular person, and I know that you have a whole different level. So I'm excited to do that, and we were intending on having a guest or 2 or 3, talk to us about AI anyway. So when I had the chance to talk to you about something very specific in the really 2 points is one, transitioning from, the regular world into, being a real estate making money, a real estate professional versus, regular job. And then also what you do in terms of using the data to understand, short-term rentals and other things.
Yeah. I diverted us a little bit. So, you were asking about the timeline, and I went to the Marine Corps. When you get out of college, and you try to commission it into the Marine Corps, you have to go to what's called the basic school for Marine Corps officers.
Right.
So I went to the basic school. After that, you have one more school, which is like your specialty occupation school. And so I then went to communications officer school. Mm-hmm. And so I was a commo in the Marine Corps, 0602, which basically means that I ran communications infrastructure. So data systems architecture, network infrastructure, cryptography systems, radio communications, wave propagation, bunch of nerd stuff. And I was in charge of a bunch of nerds, which I loved.
Wow.
It was an awesome experience.
Do you, this is a test. Do you know what a skiff is?
Yes, absolutely. Yeah. Yeah.
I clerked for a judge who had some government cases, and it was really a construction case. But because they were building a skiff, I had to get top secret clearance because a skiff is just basically a highly protected, an area where communication is blocked out to avoid spying or whatever. And if you put a gun to my head, I couldn't give you 5 cents worth of information that would be useful to anybody. I basically have just told you everything that I know.
That's the crux of it right there. I think you hit it.
Yeah. It's just how you do all that stuff. And I can't even begin to remember, but that's why. And then I did have with the top secret, thing, I did have some briefings inside of a skiff, and the briefings were, it seems like the stuff that they taught me, you could play it on the street and nobody would, there would be no real value in hearing that in a skiff. And I remember that going in the skiff for me was claustrophobic because the wall was like this. I'm like, okay, what if I have to go to the bathroom? They're like, well, do you have to go to the bathroom? I'm like, no. I'm like, okay, well.
Yeah, it's funny with knowledge and top secret knowledge. A lot of times top secret knowledge can be classified that way because it's confirmed, right? So now it's a fact, or because this knowledge is paired with some other event. And so sometimes it's the second order effects that make the knowledge secret or top secret.
Sure. Yeah. And I also remember that, I was at the Justice Department. I'd have a separate clearance. It was a lower level, but they had to redo it. And the stuff that I considered to be secret was not secret. And then my handwritten notes in meetings was that was highly secret, and I'm like, I'm not writing down anything interesting,
There's a stick figure on this one.
but that had to go into the burn pile.
Makes sense.
Anyway.
Yeah.
So there you go. That's the sum total of my top secret.
Yeah.
Something, which is nothing. So you did the communications piece, and then you complete your tour of duty with the Marine Corps. Yeah. Right? What year was that?
So 2021.
Okay.
Yeah. So while I was in the Marine Corps, I was also a powerlifting coach, a fitness coach. I had started a online coaching business. I had around 50 athletes throughout the United States and a couple of countries. So kind of a serial entrepreneur, I think. And
were you allowed to do a side gig?
Yeah, absolutely. Cause I had optimized it. It was pretty low bandwidth. Something I would do on Sundays pretty much.
Right.
Yeah.
Right. That's cool though.
Yeah. It was a lot of fun.
Yeah. Online powerlifting. Wow.
Yeah.
That's interesting.
I know. That's a curveball.
Yeah. That's a curveball.
I know.
So talk to me about you're already working the side hustle kind of thing.
Yeah.
And then when you get out of the Marine Corps, is there any thought of a 9 to 5, or what was your entry point into real estate?
Yeah. So towards the end of my career in the Marine Corps, I had interacted with some people at this time. I was making pretty decent money with the Marine Corps officer and coaching quite a few people, at least more money than my family was used to. And there was an equal amount of money leaving my bank account because of spending habits and just immaturity. Mm-hmm. And so I had talked to one of my mentors who was also kind of a gym bro, but a gym bro who read. And he recommended me Rich Dad Poor Dad, which is
of course
classic, right? Which I think was the kind of one of the catalysts to kind of get me interested in personal finance. I read another book, I think with Michael Haraldson, How to Wake Up the Financial Genius Inside You.
Wow.
And it talks about the leverage of real estate and how real estate mechanically compounds wealth. And I read that right before my first deployment and only deployment to Kuwait. And I remember going to deployment. I think I finished the book like 2 months before. I was like, man, like, this is cool. This is really cool. And so once I got to Kuwait, I was like, you know what? I don't have anything but time here. I got nothing but time. So I worked out a lot. I ended up winning the strongest man in the AOR award. We had like a powerlifting competition for all the bases. And then I did that.
That's amazing.
I lifted like 3 to 4 hours a day, and then I read. So typically was averaging about a book a week on deployment for almost, I missed like 1 or 2 weeks at the end. Don't tell anybody, but I did. It was almost a book a week for 6 months straight.
Wow.
Yeah.
That's amazing. There is a book called Profit First.
Yeah.
Oh, do you know that Profit First?
I love that book.
Wow.
Yeah. 1%.
Yeah. So I don't read because I'm too like ADD to read, but I saw him speak in a small group. And so I had quite a bit of interaction with him, and it really shifted things for me.
Yeah. It just makes sense.
It really does. Makes sense. And we've got to get him as a guest, the author of Profit First, for sure.
Absolutely. I think it's in line with a lot of the personal development, like mechanics, like, hey, do something that's very easy to do, like James Clear, Atomic Habits. Yeah. Make it easy. And 1% just seems like, hey, if I can't set this aside, I don't have a business.
That's right.
And
what he talked about having, like, creating a money eating machine is something that resonates with me a lot because, the business that I'm in is the brokerage business is a great business, but it's so high volume, low margin that if you get a little bit of a shift in the income, it can be really disruptive. And I will sidebar for a second just to say in my book, Wealth Can't Wait, there's a section that I wrote, which is the 7 pillars of business. And I feel like that's like really my consulting module, which I could just tear that part out and give away. We should probably do that for the podcast for sure. And there's one thing that I would put in there, which would be the 8th pillar, I think. And that is evaluating margin. And what I mean by that, the easiest way for me to explain that is if you and I have a business, let's say you have a great business, I have a great business, and we net $100,000 a month. That's awesome. And we're going to meet at Wells Fargo, once a month where we take our $100,000 check in, and then we're going to go have coffee and, have fun and talk business or whatever we're going to do. And we both get in line and we both have our $100,000 check. And my business is, $1 million of overhead, a month, let's say $1 million of overhead a month. And I brought in $1.1 million. And so that's why I have $100,000, like, net profit clear to me, do whatever you want to do with it. And you have a business that costs, these are exaggerated numbers maybe, but you have a business that costs $100,000 a month and you've brought in $200,000. Your $100,000 check cash is just as good as mine. And it's the same, except for if your business gets off 20%, you're not that bad. You're not that bad off. My business gets off 20%. I'm smoked. And that does sort of describe the brokerage business because, I I forget what, before we reduced our footprint, our monthly spend just on rent. It could be like $500,000-$600,000 just a month on rent. Well, if you think about the location, like where's the location we're in right now? It's a gorgeous location.
Wow.
What does this cost a month? $50,000 a month. So you have 10 locations, you're at $500,000, and that's before employees. So it just creates this and when you're making really, really great money, that's great. And any kind of a shift, you can't shift out of rent that quickly. You can't shift out of, so profit first really resonated with me. So, enough of that diversion. So you read all these books in Kuwait.
Yeah. And then I was hungry. So I started looking at houses while I was in Kuwait, reached out to a couple of different agents, and then kind of paused my search on the agents. And I was like, you know what? I'm going to find a loan broker first.
Interesting.
And I made that choice for a bunch of reasons. I wouldn't necessarily suggest that other people do that.
I think it's an interesting idea, by the way. Well, here's the thing. The worst time to check your credit is like right before you buy.
Yeah.
That's the worst time, because there could be stuff that's not even legitimate that's screwing up your credit, or what most likely is the case is there's some legitimate stuff that's screwing up your credit. And if you have credit that's screwed up, even if it's legitimate stuff, you can do amazing stuff in 6 months.
Yeah.
But you can't do very much in 6 weeks.
No, almost nothing.
Yeah, almost nothing. Whereas 6 months, you can fix a lot of bad stuff.
Right. Yeah. And so I was thinking from the credit side, I was also thinking from the max qualifying loan side. And I wanted to find a broker, because what I was trying to do, it felt like I was getting a lot of no's from agents. And I was like, okay, I might experience friction on the loan side unless I find a broker who really feels confident that he can achieve what I want to achieve, which is I wanted to buy a Quadplex with a VA loan and in San Diego, right?
Right. Okay. So that's where, San Diego is where you were based. Is that?
Yeah.
Okay. Got it. So you're based in San Diego. You get deployed to Kuwait.
Yep.
Okay.
Yeah. I came back and basically immediately started my search. And so I started connecting with the broker, kind of understood what my left and rights were in terms of what I can afford if it's a duplex, triplex, quadplex, made a big table, a lookup table, made some quick formulas, and then just created some quick scripts. I was using at the time AppScript, because it had been a while since I had coded. Because I coded quite a bit in college, but 5 years later almost. And so I would just copy and paste the CSV from Zillow and a little plugin and then it would underwrite all of them at once and be like, okay, these 6 passed the first check. What do I do now? And so I probably underwrote maybe 200 to 300 properties at a slightly deeper search level, and maybe 500, 600 at the broad. Because I heard this one line in one of the books I read, which was hey, if you look at 100 properties, you might make an offer on one. I was like, okay, well, I might need to make 3 to 5 offers. So I need to evaluate 500 properties.
And that's a great way to kind of reverse engineer it. And I'll say this, most of the people listening to this podcast, including me, are not going to know how to, write a program to underwrite a deal. And, one of the things that we love to do on the podcast is get people in who have made that jump from not owning any property at all, any investment property at all, to making a good living, making a great living, or just as a side hustle. And most people aren't going to know how to code to do that. But what I hear you saying is when you're talking about underwriting, you're talking about the basics. I underwrite too. And I underwrite big deals on the back of an envelope.
Yeah, that's how it should be.
Yeah. And I get discouraged because when you're dealing with commercial grade multifamily, the brokers will put together this big package, and I read the package. I've been doing it all these years. I'm like, wait a minute. I don't understand. It's like, who is reading this? Who understands this thing?
Yeah.
And my back of the envelope is, how much are we buying it for? Where do we want it? Where do we want it to go in terms of rent, because of value add, right? So I'm generally not buying something that I'm doing nothing to. I'm not sure I've ever done that, ever.
Okay.
So I'm buying something that's got like, some kind of a hair on the deal or whatever. And then what am I going to do to that property? How much does it cost to do that to that property? How long does it take to do that to that property? And then what is the after renovation rentals, which then generates the valuation? And it's like 4 variables.
Right. Exactly. You define the constants and the variables and work backwards. And
that is, the fancy name for that is underwriting.
Right. Yeah.
I've just underwritten a deal. How much, what can we buy? I'm interested right now in North Hollywood because I feel like it's a growing area. Okay, great. So what can we underwrite a fourplex for? It's just like, how much can we buy it for? What's the rents now? What are we going to do to it? What are the rents going to be after? Bam, done. And I don't understand what the whole package is about.
Right. I think it comes down to like, if you're going to jump into real estate, but you're hesitant, you're probably hesitant because you feel like you have a lack of knowledge. Right?
Yes.
So the first thing that you have to solve is you got to solve that gap, right? Between where you're at now and where you need to be to feel safe enough to make that first step. And then you have to realize that there's professionals like yourself, right? The real estate agents and loan brokers who've been in it for a lot longer, who can kind of take your basic underwriting, your smell test, and go deeper into it, right? With you. And also a mentor. I always feel like if you're going to get into real estate, have a mentor who's done a couple of deals. That's super important. But solving that knowledge gap is really just understanding a few formulas.
And I'm embarrassed to say, I think I said it for the first time not that long ago, because I was analyzing the deals that I do and have done. And I own a brokerage, so I could do the deal for myself for free with no commission. And all the deals that I've done, I've paid full commission. And I spun it a different way for the first time, which is if I'm not paying full commission, it's not a good enough deal. And the proof of that goes like this. You're the realtor. You come across this deal that's a great deal. You might want to buy it yourself, but you can't buy every great deal that you see. So then you're going to go to somebody,
right?
And that somebody's not going to be me, even if we're friends. If I'm like, well, yeah, I want to pay zero commission. You're going to be like, this is a great deal. I'm going to take it to somebody that's going to pay full commission,
right?
And that just makes financial sense. So, if I'm not paying full commission, I've got to really double check the deal that it's a good deal.
Well, it goes back to your earlier statements. Like if your margin is so small, like 2%, if that's the difference maker, then you're doing it wrong.
That's right. That's right. That's right. I'm looking for a big, upside. And again, previous show, but not that long ago, I just wrote an article about it of, the day I closed escrow on my house, I gained $1 million. You're not going to do that at zero commission.
No.
Somebody's going to give that deal to somebody else.
Yeah, absolutely.
Yeah.
There's enough money in the good deals for everybody to get paid.
That's right.
Yeah.
Yeah. I love it. Okay. So you underwrote 500 deals, but you're using like a computer,
a spreadsheet and app script. Like app script is just, it sounds, technologically savvy. It's just Google's coding language and allows you to interact with spreadsheets and other Google objects. And so at the time, I just, I wanted to be able to get in front of as many properties as possible, but I was also a Marine Corps officer, also had a coaching business. And so I was like, all right, how do I do this in a way where I can feel confident going to layer 2? And that's all I worried about. Like I didn't need the math to be down to like, okay, is the utilities cost going to be $75 per unit or $96 a unit? Expense ratios, easy back of napkin kind of stuff like you talked about, narrowed it down. And then I would go deeper on the properties that passed the initial check.
Mm-hmm. And one of the things too, it's one of the big sells that I have for real estate. And I am going to get some like killer, financial advisors that don't invest in real estate. And I'm going to pick their brain with an open mind. And I got to tell you that I grew up in Pittsburgh, the blue chip stocks at the time were United States Steel, Alcoa, Aluminum Company of America, some other, other blue chip stuff. And, United States Steel was, Google and Facebook, they call them the FANG stocks, and Alphabet. That's how strong it was. And there was no end in sight. And, a generation later, it's like, it's gone. And I don't know where Apple and Facebook are going to be a generation from now. And they might be just totally
world dominating.
Yeah, they might dominate the world, and they might not. We watched the like shock that Nvidia stock had when, DeepSeek came out or whatever. It's like, that's too much for, what I know is a fourplex, in West Hollywood is going to, we don't have a crystal ball, but a fourplex in West Hollywood a generation from now is going to be just fine.
Absolutely. And one of the things that we have to remember is that you can't control those other companies.
That's right.
With a real estate asset, you have control. You have the ability to be creative, right? You can turn a Quadplex into a boutique hotel, right? Multiple Airbnbs. Right. You can invest your time and energy to turn that individual business asset around, or you can liquidate it and move the funds tax-free, right, via 1031. Right. There's so much control that you have. So if you feel like you are somebody who needs control and wants to really take ownership of their financial future, to me, real estate is the route. If you feel like you have a lot of discretionary income and you want something completely passive, then, put your money in Bitcoin and, hope for the best.
Right. Yeah. See what happens.
That's my personal opinion. That's number one. Number two is that we have to remember that, just like you said, we don't know what's going to happen with FANG. Mm-hmm. The entire world's going to change in the next 10 years. Mm-hmm. The entire economy is going to change. Yeah. We're talking about universal income as a high potential future. Mm-hmm. And so when we have these black swan events, we have to go back to certain things like, what are people always going to need? People are always going to need to live in a 120-mile weather belt that is LA and San Diego, right? They're always going to want to live by the water. They're always going to need shelter. Mm-hmm. And so when you have assets, especially in markets like Southern California, where you're geographically constrained, I think you're going with a safe bet. That's not completely safe, 100%. There's no asset that's, sinkhole proof.
Right. That's right. And also, I also think about like the inside, if we got on the podcast, the person that is, at the forefront of technology investing, forefront, they still can't predict the future of what's going to happen. And I think that when you buy that fourplex and then you pay a home inspector, right, you're getting more information about where that asset is going than the expert is going to know about Apple stock. I mean, how do they
can touch it?
Yeah. And you know what? It's like the roof is either new, in which case you're not going to need to replace it, or it's got, 10 years worth of wear on it. And there's like, you're going to know, it's basically the insider trading in a weird way.
Yeah. Yeah. It's pretty binary. There are occasions where I feel like the home inspection in particular can yield like a non-yes or no.
Yes.
Because it's like, okay, how much useful life does this have? Well, it could be like, 2 years, or it could be like tomorrow.
Right.
But when you're underwriting, take all those tomorrows and put them as expenses. Yeah. And so if you underwrite conservatively and it pencils out,
you're going to be fine.
Yeah.
What drew you to, tell me about your first purchase. What drew you to short-term rentals? Yeah. How you working that out?
Yeah. So, the first purchase was the Quadplex. So I made that happen. I lived in one unit, a 1 bedroom, 1 bath, and then rented out the 3 bedroom, one bath, one bedroom, another one bedroom, and a studio. And so the way I had structured the deal is I closed with $0 cash in, right? Because the VA loan.
Mm-hmm.
I closed on like the second of the month on purpose. We pushed escrow like 3 days. So I had like 59 days without having to make my first payment. But
Wow.
while we were in escrow, I lined up tenants for the other units.
Mm-hmm.
And so within about like a week, I think it was like 6 days for the 3 bedroom and then 8 for the other 1 bedroom and the studio. I had the unit completely filled.
Mm-hmm.
The Quadplex
So you
filled.
bought it vacant.
I bought it vacant. Yeah.
Did it need work?
Very, very little.
Uh-huh.
So I bought the house. I made the offer a few days after the COVID announcement.
Wow.
Yeah. And so the investor I bought it from later hit me up. He's actually a very good agent in San Diego. He's like, hey, you know what? Like if there wasn't that announcement, we probably would have listed it at like 100K over.
Mm-hmm.
Cause when I first underwrote the deal, I was like, this seems like
Great.
It was the first deal where I was like, okay, I need to call my agent and we need to move fast on this.
Uh-huh.
Yeah. So I wrote him a letter, which I don't think you can even do anymore, like a personal letter.
Yeah, we do it. Yeah.
Yeah. My agent was like, I think it's kind of discouraged. I don't know if you should do it. I was like, I think we should do it. So they went with our offer. There's a few other ones.
Mm-hmm.
And so
the personal letter is like, hey, I'm Christian. I'm in the military. I'm serious about this thing. I've got good credit. I'm going to use a VA loan. I'm really going to close. Like
choose
that.
me or
Right.
I'll cry.
Yeah.
Yeah.
Oh, and maybe a little emotional heartstrings.
Yeah. Yeah. That's what I said. No,
I love it.
So Quadplex got filled up with long-term tenants. I had my first vacancy, and Airbnb had started to blow up at that
Mm-hmm.
time. I was like, okay, I'm gonna try this Airbnb route. Ended up hiring up an Airbnb property manager to run it. Actually, a couple of different managers. Did not go that well, but I saw the potential in the business model.
Mm-hmm.
Right? And so during that time, I was also writing algorithms to find properties with what's called underutilized zoning.
Mm-hmm.
So this was right when ADU Bulletin 400 came out in San Diego,
right.
which was basically this letter that came out and said, hey guys, granny flats have been around forever, but now you can actually do them legally.
Mm-hmm.
And here are the stipulations.
Mm-hmm.
And so when this happened, I was like, okay, this is kind of a big deal,
Mm-hmm.
right? Infill development, the ability to develop
Mm-hmm.
land, which is a huge generator of wealth
Mm-hmm.
without having to buy empty lots
Right.
and have
That's
all the
right.
holding costs associated with them.
Mm-hmm.
That seemed pretty attractive to me.
Mm-hmm.
So I ended up basically creating this, which was just a slightly more complicated version of my first tool.
Mm-hmm.
And when I say algorithm, it sounds super technologically
Mm-hmm.
savvy. It was not that cool. I promise.
Mm-hmm.
It wasn't. And mostly because at the time I didn't have ChatGPT.
Right. That's right.
I didn't have a lot of time. So it's maybe 2,000 lines of code at most,
Mm-hmm.
which is small in comparison to a lot of things.
Mm-hmm.
So I found my first deal. We ended up buying the house as a group of 3, so me and 2 other partners,
Mm-hmm.
and it was it was a duplex in North Park, San Diego, and we found out that if we kind of combined all the new special rules together, we could take it from a duplex to a sixplex,
Mm-hmm.
because it was actually underutilized zoning, not only from the ADU perspective, but from
Right.
another perspective called the Florida area ratio.
Right.
Long story short,
You could build one more unit.
exactly, you nailed it. Yeah.
Yeah, you could build one more unit, and then for each of those units, you could build an ADU, and that's how you go from 2 to 6.
Yeah. So that was pretty much exactly what happened.
Uh-huh.
And so we ended up doing that project. And as we were building this, we decided, hey, let's try to do Airbnb on these units
Mm-hmm.
to increase the gross revenue.
Mm-hmm.
And those became my next units. I repeated that model a few more times with a few more friends. And we kind of went the Airbnb route because especially right then, it was a gold rush.
Mm-hmm.
The market was definitely getting saturated with Airbnbs, but the post-COVID revenge travel was raging.
Wow.
So you could throw some Amazon furniture in at that time and just make money over fist. It's different now.
Yeah.
It's very different now. So that's kind of how I got my start. I, bought my first got a taste for it.
Right.
Started buying development projects.
And your fourplex that you were living in, was that cash flowing or was it just?
Oh yeah.
It was cash flowing. So you're living for free and bringing in cash, or?
Oh, yeah, significant amount of cash. Because when I converted the all to Airbnbs,
I see. Yeah.
I was making like $15,000 to $20,000 a month.
Wow.
In gross revenue, and my monthly payment on that was like $5,600.
Wow.
PITI, or principal, interest, taxes, and insurance. And so after operating expenses, there was months where I was taking home like a $10K check.
Wow.
Yeah.
That's great. And then I can see why you looked at that and said, hey, let me see what else I can do. Why were you using friends to do it with? Was it because you wanted extra capital? You wanted extra hands on deck, people to work with?
I mean, honestly, it was mostly because they asked me to. I had friends who just kind of heard about what I was doing. I was posting on my story, just like kind of putting it out there because I thought it was cool and fun. And I had friends be like, hey, can you show me how to do this? I was like, I mean, I don't really know how to teach you. We could do it together if you want. So I'd bring in some cash, they'd bring in some cash, and we just kind of made it happen.
And what about, were you charging any kind of an upcharge to be the general manager or principal? Yeah. This is just friends, bring them in. Yeah.
Oh yeah, absolutely.
So tell me, you said things have tightened up quite a bit.
Yeah.
Tell me what does it look like for you right now?
Good. Yeah. I mean, overall, my properties are doing well. There's a saying kind of in the short-term rental market, which is the top 20% of the listings get 80% of the traffic. And so if you're in the top 20%, which if you know how to underwrite and you know how to create an experience, it's pretty easy to do. The market is softened, but very sustainable and still highly profitable.
What happens with, because we bought houses in Joshua Tree, really at the wrong time. I talk about timing a lot and not needing to time the market. And yet there's still, there are still bad times. And if you do it right, you can survive that. And I remember that, we bought all of ours. Location was important. What we could do with it was important. We bought them all ramshackle so that they needed a lot of fixing to get where we wanted them to go. And then the market shifted on us. And if we hadn't bought ramshackle and improved them, we'd be underwater.
I bet, yeah.
And I remember there was one that we looked at that wasn't quite as nice. We're buying at $400,000 and putting $200,000 in, and looking at something that at the time was worth a lot more money. And we looked at one that was for sale, and it was like Airbnb ready. And it got like bid up to like $1.1 million.
Paying for their improvements.
Yeah. And I'm like, wow, like if this is any indication, and then shortly thereafter, things shifted a lot, and I was glad, there's no way we were buying retail like that anyway, but I was certainly glad for it. Also at that time we were talking, and you were like using all this like Air DNA, and you're using all these sorts of tech to figure out what is the best, before I even get to that, one thing that's scary on the short-term rental side is that the government can come in after the fact and change the rules.
Right.
And that can be so, first of all, what do you think about that? And that can be so scary in a sense that I like to go into a place after they've already had.
Yes.
It's not that they can't change the regulations again, but when it's mayhem, they're going to put some regulations in that could like put you out of business. But if it's mayhem, then they put some regulations in and it's like cured most of the problems. You can sort of count on that being, there's no guarantee, but you can count on that being, a good watermark.
Yeah, absolutely. That's exactly what I tell people is if you're looking at a market and whether you should invest in it, you need to go to a market that's already regulated, and you need to the deal needs to be able to play by their rules. And so if that doesn't work, move markets. There's plenty of markets that are regulated, still have inventory available, and the numbers are good.
Right. That's right.
So I think that core thesis is sound. What do I think about the regulations? I understand it. Absolutely. We have a housing crisis in the United States.
Mm-hmm.
And so I think that big believer in the cool part about real estate is the right to do what you want with that land.
Mm-hmm.
But when that starts to impede overall public good, I can see that there's an argument to regulate.
Mm-hmm.
I do not agree with areas that completely
wipe
forbid
it out.
Right. That doesn't seem reasonable to me.
And the thing that I definitely try and stay out of is I stay out of the judgment of like what's right and what's wrong, because it doesn't really help to do that. But I am looking at, if they change what are the rules? Okay. And they change the rules to this over here. I'm like, okay, so how do we make this work for us? Or does that wipe us out? What can we still do now that the rule changes this? I'm not going to cry over the rule change. It's not going to help.
Right.
But, for example, not that far away in Palm Springs, they just get inundated and people want to go out there and relax, and there's houses are a lot closer together. So they got parties blaring, and they've gotten really strict on sound code and, how many people can occupy and all that sort of thing. And I understand it for sure. But then in LA, it kind of wiped out short-term rentals because you can't do a short-term rent. I can't imagine you can do a short-term rental in Beverly Hills, but
right.
Maybe. I don't know.
Yeah.
To check out the rules.
Yeah. I do not play in LA right now.
How would you go about finding an area? How do you find the areas that are the soft spots nationally?
Nationally? Okay. So the first thing you have to do is identify, well, one, do you already have an Airbnb management company?
Uh-huh.
Does it exist? Because remote hospitality is significantly harder than in-person hospitality. And so starting an Airbnb investment in a location that's a really strong market that you cannot touch if you're just starting out, to me, is typically not the right route unless you have an in-person partner in that area that you really trust.
Mm-hmm.
Because if you're just starting the business, there's so many things you don't know that you don't know. And I would rather somebody take a mid-grade market and then look at enough information to perform at the top of that market than go to the new fad market that they can't touch. The hospitality industry is a lot different than the long-term rental management industry.
Mm-hmm. What tools would you use? What areas right now do you think are good areas? It's a national podcast. So it's like, do I invest in Florida? Do I invest in, Austin?
Yeah. So I think there's a lot of good tools. I think most of the industry uses AirDNA.
Mm-hmm.
What you have to know about how these tools estimate income is they're basically scraping the prices from existing Airbnbs.
Mm-hmm.
And so let's say that you have an Airbnb with Monday, Tuesday, Wednesday open, right? At $300 a night.
Mm-hmm.
And then the next day, the scraper looks at the listing and checks the days if they're available. Those 3 days are not available anymore. Okay. It attributes that $900 to their gross revenue.
Right.
And so, that can create a situation where properties are underperforming, and overperforming.
Uh-huh.
And so I'm beginning my statement with, you should be very careful with how you look at the data, when it comes from any of these sources, and validate the numbers with people who are actually in that market.
Right.
And we can talk about how to do that next. But AirDNA is probably a safe choice to begin the research.
To start the research.
Yes.
Okay. Yeah. And then take me through post AirDNA analysis. What are we doing next?
Okay. So next thing is regulation, right? So you're going to identify the regulation in that area, and create a quick checklist. Like, do they have regulation? Yes or no? Does the property manager or the person managing the asset need to live within a certain mile radius? Does a local host need to be within driving distance? There's some of these different elements the different markets have that you should know. That if it passes that vibe check, then you need to look at what is driving that individual market's demand. Okay. Is it seasonal? Is it, for example, Vail, right? Colorado. Is it around a certain activity? Or is it geographical? Is it weather based, like San Diego and LA?
Sure.
And so you have to identify what's creating the demand.
Right.
And then you need to analyze the risk of whatever's creating that demand dissipating. Like, what are the chances that in the next generation, the weather belt in San Diego shifts and it becomes terrible to live here? It's possible, right?
Like Joshua Tree, for example, Joshua Tree National Park is, Joshua Tree City is at the opening of Joshua Tree National Park, which is it's a tremendous national park that people come from around the world to go to. Palm Springs, for example, it's just sort of famous because it's famous, and that might be good. But what's really there? I feel like having that anchor of having that national park, you're always going to get visitors unless, like the weather, temperature or whatever wipes out the Joshua trees. It's possible.
So you also have to look at like the temporal nature of that demand, right? Like Joshua Tree blew up because the influencer movement towards kind of like being outdoors post-COVID and kind of like, it kind of shifted things to Joshua Tree. And I think, like you said, kind of raised the prices much faster than they would have otherwise. And so you have to, like you did, you have to make sure that you're buying the deal with enough spread that you can withstand some of that demand dissipating. So that's the next thing. It's like, where's the demand coming from? And then you have to evaluate the supply. What's the risk of the supply increasing or decreasing? And you can do that through some basic Google searches, right? You need to understand, is there a housing deficit in the area, right? Is there unlimited geographical expansion available, right? If you're in the middle of Texas, as an example, and you can just spread out infinitely, then the ability for the supply to grow becomes substantial.
Right.
And what I mean by that is, if you've got like a city epicenter and it can't expand outwards, that's a very different environment than a city epicenter. It spreads out maybe kind of like an asymmetrical circle, right? Or sphere, and new epicenters develop, right? And that takes the overall future demand of the travel industry to move into that space. If that makes sense.
Absolutely. And perfect examples. No, I'll dig into that a little bit. Perfect examples are, for example, you have a great city, pick a city, doesn't matter, great city. And, you can always expand. Manhattan's on an island. Right. It's like you can go to Queens, or you can go to Staten Island, or you can go to the Bronx or whatever, and people do, but the island is not getting any bigger. And I was in Manhattan and experienced, and I was smart enough even that long ago. I didn't have the resources, or I should have just probably stopped everything and done it and, found the resources. But I knew, like, we were sitting here, that, there was a place called Alphabet City in New York. And it's just, if you were being mugged in Alphabet City and you called the New York City Police Department, they'd be like, no, we're not coming. Yeah. It was just like, it was like, that's how bad it was.
Okay, wow.
And now, and I saw it starting to turn already, because you could see, I wrote a whole thing on it, in my book. It's like, I saw the guy coming out of the building with the cello, right? And I'm like, when the guy comes out of the building with the cello, it's turning, and there's other sort of.
But gentrification's a fickle beast, because it can turn back on a dime.
Yeah.
Cultural movements.
Yes. And I don't see Manhattan. It's not landlocked, it's waterlocked. It's like, it's too constrained.
But that's a good example from the perspective of like land scarcity. Absolutely.
Yeah. And then also, along the ocean is along the ocean.
Yeah.
And there's just like, you can go inland, but you keep getting further away from the ocean. And conversely, Palm Springs, which is, which could remain great for a long, long time. We don't have a crystal ball, but I will tell you, like, Palm Springs is big because it's cool, and that may not change. And there's just more sand out there, man. You know, it's like, there's no constraint. Like, as soon as it's just too expensive right around city center, people are starting to develop over here, you know, and then the restaurants where will move over a little bit.
It could be a fad. It could die out just like anything else. And
there's no geographic constraints to Europe. Right. There's no supply side constraint.
Right. Yeah. So regulation, demand, and supply. And then you have to identify who is the target guest and why. Right.
That's right.
So out of those people who are visiting, right, you've already done an analysis of like what could stop them from visiting en masse, right? Or severely hinder that. And then who is that group of people, right? And how can I serve them in a way that has defensible moat, right? How can I create a value proposition to this group of people that can't be absorbed by hotels? And so that's personally why, you know, when I invest or I advise other people informally to invest in assets, I personally steer away from now anything lower than a 4 to 5 bedroom because the value proposition of Airbnb is a collective experience, in my opinion. And you can't really provide that in a 1 to 2 bedroom, and the 1 to 2 bedroom and 3 bedroom space competes with the hotels.
Right.
And so
that's right.
If you've ever been with a group of, 6 to 10 friends in Airbnb, you'll know the magic feels different than being in different hotel rooms. Yeah. Even if the hotel has water slides and room service, it's different than being with your friends in a house. Yeah. And so going into a new market, personally, what I look at is like, okay, what is the average cost of a 4 to 6 bedroom, like price per square foot in each zone of the city? Then I look at some other metrics for those zones, like appreciation, stuff like that. And what is the average daily rate there, which you can get from AirDNA, is the ADR and occupancy, and the average daily rate, how much you're renting the room for each night, simplified. Is that increasing or decreasing year over year? And so those all combined, all those elements, is kind of how I would underwrite a particular area.
Okay. So one of the things that I learned the hard way, I don't know, but learned along the way was really getting into business with and finding, first of all, I don't invest in places that are so far away that I can't get there. Right. And I have friends and guests on the podcast that have made gobs of money, and they're not investing, their constraints aren't like, if I can't drive there, forget it, but so I know there are other ways of looking at it, but that's my rule for now, until I exhaust that. And even though I can drive there to Joshua Tree, one of the best things that we ever did was get into business with people who are killing it at managing the properties, because they know exactly what you need. One of the things that you said was the 80-20 rule, especially in these places. And you can really distinguish yourself with certain amenities that don't cost that much money. So then, you've got a lot of lift for a few dollars. If you don't have that, you're going to sink to the bottom of the pack. Also, saturation in certain areas, like, for example, 3 to 4 bedrooms in Joshua Tree are saturated. How would you know that? I mean, I guess I would go to AirDNA or whatever, but I'm not even sophisticated really enough to do that. I could figure it out, but haven't taken the time to do that. But I asked these guys who manage 100 houses, and they're like, you know what? Actually, right back to what you said of the avatar, which would be a fancy word for who is your guest. Right. And it turns out in Joshua Tree, there are 2 different avatars. One is the people that are going to go to the park,
Yep.
And so what they want to do is they want someplace cozy, nice. They can cook. It's all good. And they're spending most of their time in the park. And they might be coming from Sweden to go to Joshua Tree to whatever. And so they want to be closer to the park, and a smaller footprint is more cost effective for them.
Yeah.
And you don't need the water slide, right? Yeah. And so that's one avatar. The other avatar is people that want to get away for, a birthday party or a weekend or whatever, a bachelor party, bachelorette party, whatever it is, and they want to get away from LA, or they want to get away from San Francisco, or they want to get away from San Diego. Yep. And that's where and
the property itself is an experience.
That property is an experience. And then and people are going to spend most of the time at the property. It's exactly the opposite. And you could be a little further away from the park. That's fine. If they're there, if they rent for 5 days, half the group might go to the park once and the other half might never go to the park.
Right.
And then that's where, I'd say water slide, but that's where you're outdoor amenities and all this other stuff. You have to have it. And also where your larger footprint, because you're going to have your group of, and then you get a little older, people want something nice. It's like where, 3-4 couples could really, really enjoy it. So it's 4 master suites, as opposed to, and it's those two sides. And so the 2 to 3 bedrooms or whatever is saturated in the middle. But, there's a great demand for something that not fake sleeps 12, but really has 6 great bedrooms, or 5 great bedrooms. And then the other side of it is really sort of a 1 bedroom, 1 bath, which does have,
a geodesic dome.
Yeah.
Right? A bed, see through, some curtains.
Yeah. It's cool. Yeah. And that there's a lot of demand for that. And then the other little nuance is it's sort of obvious once you know it, but closets aren't as big a deal in in a short-term rental than they would be when somebody's buying a house. It's where's the storage space?
Right.
That's not as big. And the other thing too is you said influencers is sort of the Instagram ability of the house.
Yes.
You have to have
Scroll
those
stopping pictures.
Yeah, you have to have those photo moments, and people want them. They'll go to a mediocre house where they can take all the photos to show all their friends how great it was, then go to a great house that has no photo moment.
Yeah. I mean, I think we're all susceptible to the nice packaging of, some good razor shaving cream compared to the boring packaging. And so I think the consumer who goes to an Airbnb wants an experience. And so if somebody spent enough time to really plan out their marketing shot, they're probably going to aim to provide an experience that they wouldn't get at their own home. And so what I tell people when they're designing Airbnbs is take risks on your Airbnb design that make you think oh, this is interesting. I wouldn't do this in my own home, but this is interesting, because that's what you want the guest to feel when they walk in the door. Hey, this is a new experience. You're not going to theme out your house. Right. But they're coming to an Airbnb to have something that's different.
Yeah.
Especially as a group. And so you went into demographics and knowing your avatar. And so my company, we're an AI-based service company focusing on property management right now. And we do pre-booking surveys before every single guest that checks in to get, hey, why are you coming? Are you celebrating? That leads to an automation on our side to order them a guest gift that's specific to them.
That's great.
What's the average age group? Stuff like that. And then they get points from our pre-booking survey and our post-booking survey that they can redeem for future rewards. So even if they're coming from Airbnb or Vrbo, we start putting them into our own booking funnel, right? So I have 12,000 guests with phone numbers in my system, right? That I can do a soft touch to via SMS or email and be hey, you have 185 unused points. Right? That's enough for a free night stay, right? Do you want to stay for these dates? But getting that information of who's coming with you, what are the demographics, leads to understanding the market more than going to San Diego, .travel.gov and seeing how many households travel here, how many people are transient travelers.
Sure.
That macro data is cool from a macro underwriting perspective, but not very interesting to know and gather the heuristics internally to your own mind of how do I make these individual assets continue to outperform the market, especially when my competition is taking a look at my photos and being like, I like what they did there. I'm going to copy that.
Sure.
So it's one of these things.
Yeah. What percentage of your bookings, or what do you think is a sweet spot for, two questions. What percentage of your bookings are through Airbnb and one of the big companies, and how many are direct? And do you think there's a sweet spot?
Yeah. The sweet spot is what gives you the most gross revenue.
So that's going to be 100% from your own, the most. Oh, I see what you mean.
Yeah. And so if you overemphasize the direct booking channel,
right.
What you're going to do is let's actually take a step back, because I think that you'll find this interesting.
Yeah.
Airbnb has one goal, and that goal is to make money, right? That's all they care about. They're a profit-driven company.
Sure.
And their goal is not to make host money. Their goal is to make money for them.
Sure.
And so when you remember that, and then you remember the next principle I'm about to tell you, which is because of that goal, their success relies on basically two things. Can they keep the guest and homeowner trust? And number two, can they show the right home to the right guest? Right? So that guest doesn't go to Vrbo or another platform that has better optimization to show them a home that they might like. And so if you think about like, okay, that's their business model, those two things. So they have to have pretty advanced mechanics to say, do I show this house to a guest? And with that, they view their first page results almost like a land developer views plots of land. Each spot has a monetary value. And when you don't convert and we don't earn them money, they're not going to continue to promote you.
Right.
And so if you don't have enough guests in your database, right? If you don't have a direct booking funnel, then you need to start building one now, right? Because that's what everybody's going to be doing. Start building it now, let it accumulate, and optimize for getting as much revenue for your current situation, which is optimizing the primary booking channels visibility, which is Airbnb.
Right. That's interesting. So if you took 80% of your booking to private or direct, then when you're trying to get the other 20%, Airbnb is just not going to feature your property.
You will see an immediate decrease in performance when you start taking bookings off of their platform.
Wow.
And that
never thought of that. It makes perfect sense.
You have two assets, exact same 3 bedrooms side by side.
Sure.
Why would their algorithm not do that? One asset's going to make them money. They're only on one platform. They're always booked. The other asset has a bunch of days blocked off because of owner blocks or another booking website. Why would they not prioritize that one?
Yeah. I never thought of that. I also was thinking that you said that Airbnb has, two prongs they really need. And I was also wondering if there was a third, which is to keep you from stealing the guest, but that sort of does it already, what you're talking about.
Absolutely.
That's built in. Built in way to, because I was thinking like, how's Airbnb going to hide the guest information from you? And they can't really do that because you're going to have interaction with them. So you grab their information. Anybody that's smart is going to grab their information. And so how are they going to protect that? But the answer is
by being the trust platform.
Yeah.
By being the trust platform. Yeah.
What is, I know this is probably a guesstimation, but what is the sweet spot for having your own bookings and still staying enough on Airbnb to?
Oh, this is an easy one, actually. The sweet spot is there's no mathematical percentage. What you do is you take a look at your calendar. Let's say you're looking 60 days out. And for that time in the season, your average lead time is, let's say, 30 days out. When you're inside that window, your ability to get a booking obviously drastically decreases because you're inside the average person, the average lead time. So how far out are guests planning for your asset? If you're within that window, you're only getting the last minute planners, right? And so you combine that and then you look at, okay, what is the statistical chance of me getting any one gap closed by a client? So let's say you have a Monday, Tuesday, Wednesday. the chance right now in October of you getting a Monday, Tuesday, Wednesday booked, if you're in San Diego, is less than 10%, right? That 3-day perfect fit. If you want a 2-day fit, the chances increase to about 30%. 1-day fit increases further. And so there's a easy mathematical formula that you can apply that's like, what's the true value of those days based off the statistical chance of getting booked? But you don't have to do that. What you do is, hey, if you're within the booking lead time and it's open and that day is less than 50% occupied by the market, then open it up on another booking channel, right? Open those specific days open or on another booking channel. Because if you have 2 listings who are both not going to get Monday, Tuesday, Wednesday booked, one of them got it booked on another platform, that's okay, right? And so you're probably not sacrificing your overall yearly revenue from that perspective. Further, you can also add a premium to that other booking website, Vrbo, or your direct booking website, to compensate for kind of the loss that you got in terms of algorithmic loss. Is that making sense?
And the adding the premium, is that a premium that you give to Airbnb to promote it, or are you lowering your price?
Okay, good question. So now, if you're doing direct bookings, you're not going to have all the booking commission fees.
Right.
So you probably don't need to provide a premium if it's direct, because you're already going to be making 20% more net.
I see. So if you've got a vacancy and you have your own database, you're going to go out to that database and be like, hey, we're running a special on Monday, Tuesday, Wednesday on this place in San Diego. You can have it for half price.
Yeah. And so you're just trying to influence guest behavior, and you can do that on Airbnb as well. So if you have like a Monday, Tuesday, Wednesday, and it's a very low chance of getting a 3-day booking, then on your Monday, put an overlay. It's on your calendar. You just drag it over. You put a special rule. You say, hey, if Monday is booked as part of a 3-day stay, give Monday 60% off.
Right.
Why would you do that? 60% off is ridiculous. I don't want a cheap guest coming in. The apparent value, like the true value of those days, remember, is the formula of like what's the actual chance of getting those 3 days filled. And so a lot of times it's very low, and you increase the chances dramatically of getting that 3-day gap, because Airbnb, going back to principle number 1, only cares about getting a guest booked. And just like an Amazon sale increases the chances of that product getting, purchased by a customer, that's why it gets pushed to the top. Same thing with Airbnb. It's just figuring out what's most likely to get booked, and you get a strike through in your pricing. So it from a consumer perspective, makes them feel like, all right,
I'm getting a deal.
This is a good deal.
That's cool.
That was a lot fast. I'm sorry.
That was good. That was good. It also, part of it makes me just want to say, you know what? Honestly, it makes me think I just want to hire a professional, to be honest. And you're either going to kind of master this yourself, or there's a lot of value in having somebody who's really, really good at it. And even when I'm looking for a property that's multifamily, that's not short-term rental, I'll often look for a realtor that has a lot of investor clients, or they're investing themselves.
Exactly.
And then I'm like, all right, these folks know what they're doing. That's back to make sure they're getting whatever, 3% on the sale or whatever. I'll give you full commission. Make sure you're putting me in something that's, I'm going to be real happy about, and I'll be a repeat customer. And it goes back to, the guys that we got in business with in Joshua Tree. That's just not, no matter how much of a professional I am, and I want to learn, the stuff that you're teaching. And I'm just like, you know what? I got to get these guys to do this thing for me, because they really know. And I wouldn't buy another one without saying all right,
Who's going to
dude, I give, you pick the place for me. That doesn't mean I'm not going to underwrite it just as hardcore as you are. I'm going to underwrite it very hardcore because I'm letting somebody else pick it for me now.
Yeah.
But I'm just going to be like, go ahead, have at it, pick it for me, send it to me. Why should I buy this? Tell me why I should buy this. And what they're going to get out of the deal is I'm going to let them manage it. So they're going to get another unit to manage. They have incentive to go ahead and shift me. If it's such a great deal, they're going to buy it themselves. And then if they can't buy every great deal, so I go, okay, great. Send me the next one that you're not going to buy. I promise you've got the management fee. Let's go.
Yeah. And the management fee is substantial. Like the short-term rental management fees range from like 12 to 25%. It's not a small amount of money.
That's right.
And so we do the revenue management as one of our verticals, and we take over just the revenue piece for homeowners, right? Because you're right. A lot of people can learn it, but the question becomes like, what's the time value or the monetary value of your time? And are you willing to learn it and update it multiple times a day?
Yep. Yeah. Sorry. I know my answer for that. I would consider myself a professional and I know my answer.
Yeah.
My answer is get into business with somebody that's going to really, really know this thing and pay them what they're worth, just be done with it.
Yeah.
Which, I should be doing business with you for sure.
Yeah. If you come to San Diego or anywhere,
it might be, that's not that far. That doesn't really break my rule. So,
yeah.
So absolutely. I like it. Thank you so much.
Yeah. Thanks for having me.
I really appreciate it. It'll be one of many, many conversations we have, no doubt. And, I'm going to do a quick fire round. So ask you
a fire round.
Yeah. I don't know because you were here before, but did you see our fire round from the last guest?
I heard you guys talking, but I had my headphones in.
Good. Oh, good. Yeah. Okay. That's good. So we'll surprise you.
Okay.
And I'll just ask you questions and just, sort of off the cuff, best answers you have. A lot of them are deep, so we could go deep, but we won't.
Okay.
The fire round.
Okay.
What's your idea of perfect happiness?
Maslow's hierarchy of needs. I think perfect happiness is a combination of self-acceptance and self-worth, and stoicism, right? You need to understand yourself and the value that you bring, but also realize that there are conditions outside of your control and to focus on the things in your control. And I think that's a pretty good recipe to be overall happy.
What's your greatest fear?
Oh God, I gotta say that. I think my greatest fear is not living up to my potential.
What's your favorite childhood memory?
So I had a tumultuous relationship with my mother. Weird way to start this question. Heavy drinker. I actually don't drink. Now I will sip on a beer socially, and then when you're not looking, I'll pour it out. And that's stemming a lot from my relationship with her and her relationship with alcohol. But there was a few memories I had with her that just kind of are burned. One of those was she was having a bad day, and I think it was maybe 7. I went into her closet and put on her dress and her shoes and came out probably flapping my arms like a penguin. And I just remember she was sitting outside on the steps, on the street, on her doorstep. And her whole mood changed. And I don't know, and that's one of my favorite memories from then.
Amazing. What's the trait that you most deplore in others?
I think a lack of empathy.
What's the trait you most deplore in yourself?
My lack of empathy. No, I'm just kidding. I would say overall, throughout my life, in many occasions, I have not demonstrated patience, and that can lend itself to not enjoying the present moment. And so I combat that personally by creating environments that I segment out, and I say there will be nothing that happens inside my brain or verbalized that doesn't have to do with the moment I'm in. Usually for me, that's concerts and trips. And I save those areas to kind of wipe the slate clean, if that makes sense.
Mm-hmm. Which talent would you most like to have?
Have you seen Suits?
Not really.
No? Okay.
Yeah.
I would want a purely photographic memory.
Wow.
Like a true photographic memory.
Mm.
I have a pretty good visual memory, terrible auditory memory, terrible. But my visual memory is pretty good. I can remember like certain facts from high school and what the page looked like, but not like him. I would want like a very good photographic memory.
Yeah. I watched Billions for a little while and he would meditate and he'd be like, and it's kind of cool. Anyway, fire around. I'm not supposed to comment, but one last question, and that is, there's a lot of great hiking trails in LA, San Diego probably. You climb up this, really steep trail. Takes a lot to get up there. You sort of get to that peak and you look down and it's your family and your friends and your colleagues and your whole community, and you shout one thing. What's the thing you shout?
I love you. Yeah.
That's cool. Thank you very much. Really, really appreciate it, man. That was awesome.
Thank you very much.